For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. The artificial intelligence megatrend is projected to dominate market narratives over the next 10 years. This transformative technology is not just a passing fad, but is set to reshape industries and economies globally. According to a report by Statista, the global artificial intelligence market is anticipated to grow from $136 billion in 2023 to an astounding $827 billion by 2030. This represents an impressive compound annual growth rate of nearly 30%. The rapid expansion of artificial intelligence is expected to create a massive demand for related products and services, making it a key area of focus for investors looking to capitalize on long-term trends. As companies across various sectors increasingly adopt artificial intelligence technologies, those that can establish an early mover advantage are likely to deliver market-beating returns to their shareholders. Among the numerous companies investing heavily in artificial intelligence, two stand out for their potential to make investors millionaires. Let's start with Supermicro. The company has delivered a staggering 2,880% return to shareholders over the past 5 years. Such a remarkable gain is a testament to the company's ability to capitalize on the growing demand for high-performance computing solutions. However, despite its impressive performance, Supermicro's stock is currently trading 57% below its all-time highs. This significant pullback provides a rare opportunity for investors to purchase shares of this artificial intelligence powerhouse at a relatively low valuation. Supermicro is a leading provider of high-performance server and storage solutions. The company's product offerings include storage systems, workstations, networking devices, server management software, and security software. After reporting its Q4 results for fiscal 2024, which ended in June, Supermicro's shares declined. The company reported revenue of $5,310 million and adjusted earnings per share of $6.25. While these numbers are strong, they fell short of analysts' expectations, which had forecasted revenue of $5,300 million and earnings of $8.07 per share for the June quarter. One of the challenges Supermicro is grappling with is narrowing profit margins. Despite experiencing record demand for new artificial intelligence infrastructures, the company's gross margin has decreased from 17% to 11.2% over the past 12 months. This compression in margins has raised concerns among investors, leading to a decline in the stock price. Supermicro forecasted earnings to be in the range of $5.59 to $8.27 per share, with a midpoint estimate of $7.48 per share. Unfortunately, this is slightly below the consensus estimate of $7.58 per share, further weighing on investor sentiment. Despite these challenges, Supermicro remains an attractive investment opportunity. The stock is currently trading at a forward price-to-earnings ratio of 15, which is relatively inexpensive considering the company's growth potential. Analysts forecast that Supermicro's earnings will expand by 62.4% annually over the next 5 years. This robust growth outlook suggests that the stock has significant upside potential, making it an appealing choice for investors looking to capitalize on the artificial intelligence megatrend. Moreover, analysts remain optimistic about Supermicro's future. They believe that the stock could surge by over 77% from its current levels, driven by the company's strong fundamentals and the growing demand for its products. If these predictions materialize, Supermicro could deliver substantial returns to shareholders, potentially turning early investors into millionaires. Now let's shift our focus to CrowdStrike, another company that is well positioned to benefit from the rise of artificial intelligence. CrowdStrike, which trades on the Nasdaq, is a leading provider of artificial intelligence-powered cloud-based cybersecurity solutions. The company operates in a recession-resistant sector, as cybersecurity has become a top priority for businesses worldwide. With the rise in digital crimes and cyber attacks, companies are unlikely to reduce their cybersecurity budgets even in challenging economic conditions. However, CrowdStrike's stock has also faced challenges in recent months. The company experienced a significant drop in its share price following a major information technology outage last month. This outage, which was tied to CrowdStrike's systems, impacted more than 8 million devices. As a result, CrowdStrike's stock plummeted by 39% from its all-time highs, creating a buying opportunity for investors. Despite this setback, CrowdStrike remains a compelling investment. The company's artificial intelligence-powered cybersecurity solutions are essential for businesses looking to protect their digital assets in an increasingly connected world. CrowdStrike's platform leverages machine learning and behavioral analytics to detect and prevent cyber threats in real time, offering a robust defense against a wide range of cyber attacks. The time might be ripe to initiate a position in CrowdStrike given its strong financial performance. Additionally, the company's annual recurring revenue grew by 42% year over year, reaching $2,730 million. This strong revenue growth underscores CrowdStrike's ability to generate stable cash flows across different market cycles, providing a degree of resilience that is highly valued by investors. Unlike many other growth stocks, CrowdStrike is consistently profitable and generates positive free cash flow. This impressive growth in free cash flow highlights CrowdStrike's operational efficiency and its ability to convert revenue into cash, which can be used to fund future growth initiatives, pay down debt, or return capital to shareholders. Despite its strong fundamentals, CrowdStrike's stock might appear expensive at first glance, trading at 61 times forward earnings. However, it's important to note that the stock is currently priced at a discount of more than 40% compared to the consensus price target estimates. This suggests that there is still significant upside potential for the stock, especially if the company continues to execute well and capitalize on the growing demand for cybersecurity solutions. Analysts remain bullish on CrowdStrike's prospects, and many believe that the recent pullback in the stock price presents a compelling entry point for long-term investors. With its strong market position, innovative technology, and consistent financial performance, CrowdStrike is well positioned to benefit from the ongoing digital transformation and the increasing importance of cybersecurity in a connected world. In the end, the artificial intelligence megatrend is set to drive significant growth over the next decade, with companies like Supermicro Computer and CrowdStrike poised to capitalize on this opportunity. Supermicro has delivered remarkable returns to shareholders in recent years and offers a high potential investment opportunity despite recent stock declines. The company's focus on high-performance computing solutions positions it well to benefit from the growing demand for artificial intelligence infrastructure. Meanwhile, CrowdStrike offers a solid investment option with its artificial intelligence-powered solutions, driving consistent revenue growth and profitability. Both stocks have significant upside potential, and analysts remain optimistic about their future prospects. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.